Good evening. You're watching What You Miss on Bloomberg Quint Live. I am Agam Akil. Let's start straight with the headlines. Indian equity benchmarks advanced to a record for the third straight day, led by gains in Coal India, Yes Bank and Wipro. Coal India is the top gainer on the Nifty after the mining giant hiked coal prices for the first time in 18 months. And the Telecom Commission will meet today to try and finalize its recommendations on a relief package for the industry. The IMG has already submitted its proposal to bail out the sector. And the Finance Ministry mulls 70% duty on the imported solar cells to protect the domestic solar industry. And Donald Trump drops plans to tighten H-1B visa policy that could get 7.5 lakh Indians deported. But coming down to the markets, the rally continues in the last street with both Nifty and the Sensex ending at record levels. Neeraj Shah is standing by to take us through all the action on the last street today. Neeraj.
It was a quiet day of trade, almost consolidation. In fact, the broader markets corrected a little bit. So if you look up the mid caps and the small caps, they came off a little bit in the session today. But no alarm bells, quite frankly. The volumes remain on the higher side. Keep that in mind. What did well, what did not? Let's bring up some individual movers in the session today. I think one, Coal India, because of that price hike in non-coking coal, led to a 5.5 or a 6% up move in Coal India. This is probably the best that I've seen in a really long time for the big boy in the coal space. But there were persistent pain in Bharti Airtel, and Idea followed suit along with it. So after a 4.5, 5.5% downtakes yesterday, we had another pain day for these stocks. Though much better than what happened yesterday, but still down. What also corrected today was stocks like Z, iShare. These were amongst the top losers in the session today. HDFC was one of the top contributors on the downside as well. NMDC, because of that OFS, and that one's down about 4.5% in the session today. Well, having said that, before we get to gainers, just need to mark these stocks. These are some high-flying stocks that have corrected. So Philips Carbon Black, unabated rally for a really long time, was up about 12 or 15% in trade yesterday, down 4.5. Symphony nudged up the marks of 2050 and correcting about 3.5. So all of those are coming off. But what's doing well, Cafe Coffee Day or Coffee Day, 328 was the IPO price, listed at 313. Today's short price, the listing price, and now could well likely go above its issue price as well. Watch out for this one, a big move, about 19%. Not as impressive as Coffee Day, but the hotel companies, select hotel companies, continue to do well. So Oriental Hotels about 11%, EIH Associated about 6.5, 7%. So these two did okay. And Subros continues to rise and shine. Remember, 20% on that news of starting to supply air conditioners to CVs on Friday's session. Another 18.5% in today's trade. So this one continues to do really well. And Infinite Computer Solutions, they are going to be eyeing a voluntary delisting, and that stock was up about 20% in the session today.
Well, thanks for that, Neeraj. Of course, plenty of cues out there to keep an eye on, but we'll move on. But stick to the markets theme. There's no reason why Indian equities will run out of steam, says Mahesh Patil, the co-chief investment officer at Aditya Birla Sun Life AMC. And he does see volatility spike up this year. Though, then here's a slice of this conversation that he's had with Jayesh Khilnani, who started off by asking him about how the earnings season will shape up for Indian companies.
Current quarter, again, the last year, if you look at this period, we had the demonetization event. So the base is very, very supportive. So in a lot of companies, you might see a strong growth, but that should not be really confused. I think I would say, rather than looking at a quarter, if you look at over the next, say, 1 year time frame or FY19, we are seeing growth coming back stronger, again, back in the banking and financial services sector, especially the corporate banks. Should show a strong growth, because this year we will see bulk of the high provisioning impact being taken. As some resolutions happen in the NCLT, you would see overall provisioning levels for bad loans will come down in the next fiscal year. And also the credit growth, which is bottomed out, will slowly start to move up. So that's one sector. Again, pharma, telecom, coming in from very low base, we are seeing FY19 growth to be stronger. Even auto looks to be strong. And a lot of participation coming across sectors. We are seeing whether it's the metal sector or whether it is the consumer staples, I think all should record fairly steady growth. So it will be a wider participation across sectors which will drive earnings growth in FY19.
With the earnings growth, scheduled to come back as per expectation, do you also expect that volatility will come back into the market in 2018, given that 17 was a low volatile year, not only for India, but globally as well?
Yeah, so I think the last year, calendar year, has been an exceptionally best period in terms of very low volatility. And we have seen the maximum drawdown on the market was, say, around 4 to 5%, not more than that. Markets are known for slightly higher volatility. I think given that and the fact that the room margin for safety is now much less, you could expect slightly higher volatility in this calendar year.
That's the outlook on the markets. But moving on, Kolkata-based Electro Steel has received 4 resolution plans, 3 of which have come from steel companies. Vishwanath Nair is here with us with all the details. Vishy, what do you have for us?
So how we understand it, Agam, is not only were bankers earlier confirming this story, but now the company itself has come out with a statement to the stock exchanges where it's saying that companies like Tata Steel, there's Vedanta, there's also Renaissance Group, which is run by Abhishek Dalmia as part of the Dalmia Group, who are part of the Dalmia family. Now, these 3 people, apart from them, there's also Edelweiss ARC, which is backing a fund based out of Singapore. All 4 of them have submitted a resolution plan in the Electro Steel's case. Now, this case is important. There's about 13,000 odd crore worth of debt. According to a story in the news today, the plan that has been submitted by Vedanta prices the company at about 4,500 crores. So that's a significant haircut that the lenders will end up taking. It is important because it is the first of the 12 cases where there is some kind of final resolution plan that has been submitted. Buyers are will be negotiating with the banks on buying this company. Now, what happens with Electro Steels will sort of set the tone for the remaining companies, the remaining 11 companies, and then again the 29 companies which are part of the second list, and on how what kind of haircuts they can take and what is the kind of resolution plans that will be emerging in these companies.
Thanks for that, Vishy. We'll be watching out for the second list and the updates with respect to several other companies which are also part of that list. But moving on, the Telecom Commission meets today to discuss a relief package for the sector, and the inter-ministerial group has already submitted its proposal to bail out the sector, which has seen intense competition over the past 15 months or so. Sumit Sarkar draws up a list of some of the recommendations that could come up for discussion today in this report.
Of the 4 discussions that will be done in the meeting today, the first one and the one that will be keenly watched is extending the spectrum payment period to 16 years. Now, currently the rule is that the telecom companies need to pay 50% of the spectrum cost upfront, then they get a 2 years moratorium period. Post that, the balance 50% needs to be paid in the next 10 years. So the telecom companies want this 10 years to be extended to 16 years. The sector currently has close to 2.9 lakh crore rupees of deferred spectrum liability, of which Vodafone, Airtel and Idea own the majority portion. Now, this extension of timeline will increase the cash flows of the telecom companies and help them manage their capital expenditure in a better way. It will also reduce the liability burden because they will have an extended time period to pay the liability that they currently hold in their books. The second that is important and announcement that is expected to come in is the lower interest rate charged on penalties. Now, currently the interest rate charged on penalties is on prime lending rate, and they wanted to shift to MCLR. Currently the SBI benchmark prime lending rate is at 13.7%, while the MCLR is at 7.9%. So if this happens, we can see some interest cost benefit coming in for the telecom companies. Third is the proposal to relax the spectrum cap. Now, they want to relax the spectrum cap on the overall holdings to 35% from current 25%, and they also want to remove the band-wise spectrum cap. Now, currently, according to the merger and acquisition guidelines, a telecom company cannot hold more than 25% on the overall bands and circles, 25% of the total spectrum hold over bands and circles, and when you see band-wise and circle-wise, they cannot hold more than 50% of the spectrum. Now, if this comes in, it is a big benefit for the Vodafone Idea merger, as the merged entity breaches the 50% cap in 5 circles and in 2 bands. Now in 900 megahertz band, the merged entity has excess spectrum in Maharashtra, Gujarat, Kerala, Haryana and Uttar Pradesh West. And in 2500 megahertz spectrum, they have excess spectrum in Maharashtra and Gujarat. Now the value of this spectrum is close to 6,000 to 7,000 crore rupees, and this is according to multiple brokerage reports. So if this happens, it is a substantial benefit that will come in the books of Vodafone and Idea. Lastly, 100% FDI in the telecom sector. Now this will be beneficial if we see new foreign investments coming in the sector going forward.
Well, in a bid to protect the domestic solar industry, the Finance Ministry has proposed a 70% import duty on solar cells. Anindya Upadhyay of Bloomberg News had reported last week on the possibility of such a duty, but the quantum seems to be much higher. Anindya has more details in this report.
In a development which has dire consequences for the India solar sector, the Finance Ministry has proposed levying 70% safeguard duty on solar cells and modules imported from China and Malaysia. Now, this has really serious consequences for India's solar sector because India depends heavily on imports for its solar energy targets. India imports 85% of all solar equipment requirements. Also, India is the biggest customer of China for solar cells and modules. It is actually because of cheap Chinese imports that India has been able to discover lowest solar tariffs in the world in 2017. Now, the Finance Ministry, in a January 5 dated document, has proposed levying this safeguard duty for 200 days. And the petition or the application for this safeguard duty was filed by 5 companies, namely Adani Enterprises backed Mundra Solar Private Limited, Indo Solar Limited, Jupiter Solar Power, Websol Energy and Helios Photovoltaic Limited. The Directorate General of Safeguards, Customs and Central Excise has cited serious threat to industry and potential job losses as the grounds to levy this safeguard duty. And in the document, they say that existing critical circumstances justify the immediate imposition of a provisional safeguard duty in order to save the domestic industry from further serious injury. All the solar sector investors are right now really puzzled by this duty, which is going to make projects economically, difficult for them to execute by raising costs.
And the Maharashtra government has a novel idea to deal with the housing crunch in Mumbai. The state government has now allowed developers to build affordable houses on unused industrial land. The aim is to build more homes under the Prime Minister's urban housing scheme, and Purva Chitnis gets us more details in this report.
Yes, now there will be more land available for housing in Maharashtra. The state government has taken this decision to unlock the old and unused industrial land parcels within cities for real estate to boost the affordable housing scheme. As per the decision, about 20% of this land is reserved for the EWS and LIG section, where houses would be sold by MHADA under the lottery system. The industry believes that this is a very good move which can boost the affordable housing within the city limits. However, the town planners are not really happy because they believe that this requires proper planning, and unless the planning is done, this could already congest the already congested cities. So they believe when there is already a pile-up of inventory which is lying in the MMR region, there was no need for such a kind of move. However, they believe that if the proper planning is done, this could prove a brilliant move.
And the government has mopped up 67% of its direct tax collection target in the first 9 months of the current financial year. Nikunj Ori compares how this stacks up against what we've seen in the previous year in this report. Listen in.
The government has collected 67% of its budgeted direct tax collection target and has collected about 6.56 lakh crore in net direct taxes during April to December. In the April to December period last year, the government had managed to achieve 65% of its budgeted target by collecting 5.53 lakh crore in net direct taxes. Remember, the government had achieved its direct tax collection that it had said in the previous financial year. Out of the total net direct tax collected, 3.18 lakh crore was through advanced direct tax, and the government collected 7.68 lakh crore in gross taxes, out of which 1.12 lakh crore was released in refunds. According to a reply given by the Minister of State for Finance, Mr. Shiv Pratap Shukla, in the Parliament, he had said that about 6.49 lakh crore was collected in direct taxes as on December 18, out of which 3.72 lakh crore was through corporate income tax, and remaining 2.65 lakh crore was through personal income tax as on December 18th.
And Coal India gained the day after the mining giant hiked coal prices for the first time in more than 1.5 years. Nikki Mirchandani gets us the details in this report and also tells us and gives us the impact of Coal India's financials. Listen in.
Coal India now has rallied around 6%. This is after the 8.5% move that we've seen in the morning trade after the price hike development came in. The company has upped the non-coking coal prices by as much as 125 per ton, which with immediate effect. The company is expected to generate an incremental revenue of 1,956 for the remaining half of the fiscal year, and around 6,500 rupees for the its on projected annual increment revenue that we're looking on an annual basis. In December 2017, also the company took an indirect price hike by introducing evacuation charges by rupees 50 per ton. So this is a second hike of sorts for the company. And if you look, the current hike is almost 8.5% of your FY17 of your net revenue. And if you see, that should be able to take care of your employee cost, which sums around 5,667 crore. Now remember that Coal India has taken a hike in terms of its employee cost, which was the development was expected to have an impact of 5,600 rupees for this company. But if you look at the two hikes that the company have taken so far, Coal India, you would see additional revenue per year is to the tune of 8,920, and the revenue for the remaining half of the fiscal year sums to the tune of around 2,756. So that's more than sufficient to take care of your growing employee cost. And what brokerages have to say, they give a thumbs up. They say that it's a good development which has happened. Motilal Oswal, which already has a buy on the counter and a target price of 335, says that this should drive the EPS up by 7 to 8 rupees, and is expected to offset the wage hike impact. IIFL also says that it has upgraded the stock to buy and says that this price hike drives a 12% upgrades to estimates. IDFC also upgrades it to outperform from underperform. Notably, the players that are expected to be impacted by this development more than steel players obviously will be your sponge iron players. Now they include the likes of Prakash Industries, Tata Sponge and Godavari Power, and in non-ferrous space you have Hindalco, Nalco and Vedanta for that matter, which might take some hit with the growing expense of non-coking coal prices.
And the PSU giant expects the incremental amount to more than offset the salary hike that is expected to cost an additional 5,600 crores every year. But how will this affect the steel producers? We caught up with Ashish Nenan of Care Ratings to understand just that. Listen into this slice of this conversation.
So yeah, more on the steel sector, I think they are more of the captive power users. So I think on the expenditure side, they will be seeing another 1 to 2% drag due to this because the coal prices have been hiked by 9%. And this comes on the back of another evacuation charge that they had levied sometime in December, which came to around 50 rupees. So I think the overall the hike on coal has been in the range of 12-13%. So this definitely will have some impact on the expenditure side.
Ashish, what's going on with coal prices globally? You know, you're seeing coking coal prices go up as well. Is this the upcycle for coal globally?
So yeah, globally the prices have hiked up quite a bit. I think coking coal prices have been at an all-time high sometime in the recent past. So I think this is more on the non-coking or thermal side. So this would have a larger impact on power, the extensive sectors like cement or sugar or steel, fertilizer, aluminium, textiles. So definitely this is going to maybe a drag on the expenditure side. Otherwise, I think coal is at an all-time high in the global scenario, yes.
What's the impact on downstream companies? You know, Ira asked you about steel. If iron ore prices are going up and if coking coal prices are going up, isn't that inevitable that steel prices too would go up, or is that too simplistic?
Yes, definitely. It has to be. It has to go up because I think if like 20% of your prices, like cost go into electricity, definitely a hike of 10 to 12% would mean you have to pass it on to your customers at some point or the other.
Ashish, I mean, was this anticipated? I'm just wondering whether companies at the other end would have factored in a higher coal price over the course of this year, or has this sort of come out of the blue?
No, I think this would have been anticipated because sometime back in October, Coal India had signed a wage hike. So they were expecting somewhere around 6,000 go towards the wage hike. So the markets must have anticipated it. Otherwise, yes, we have more. It was anticipated that the price of coal had to go up somewhere or the other, given the global coal price movements.
What is your assessment of demand at this point? Despite this hike in prices, do you expect demand to continue to be robust?
Yes, demand is expected to continue to be robust because even the production and demand on the steel and other sectors are also like it is seen well. And even the power sector has been doing like considerably well during the last 3 to 4 months. We expect the demand to continue.
Are they being able to meet the increased demand? There was a little bit of back and forth about a month and a half, 2 months back, where some of these power companies were saying that they weren't getting the required coal, but then the Coal India guys said that they were the ones who were running short on inventories. Any sense of whether Coal India is running on target in terms of production?
I think, yeah, more or less there has been slippage of around 5%, but they should be able to meet their yearly targets more or less in the space.
Well, in other news, movie hall owners now have the option of choosing not to play the national anthem. The Supreme Court has today passed an interim order after the government set its appointed committee to look into the matter. We have Arpan Chaturvedi, who joins us now on the phone line to give us more details. Arpan, tell us, what are the updates that you're picking up from right now?
That's right. So this case basically relates to October 2017, 16 order of the Supreme Court, where they had held that as part of an interim order that it would be mandatory to play national anthem before every movie screening. Post that, of course, there was a big public debate, including from the Supreme Court itself. In the last hearing in the same matter, one of the judges in the bench had also expressed his opinion as far as this order was concerned. After that, the government has also yesterday filed an affidavit saying that they have appointed a 12-member committee to look into this issue, and not just to not just to cinema halls, but other options as well as to what will be the rules for playing of national anthem. And the government has said that till the time this committee forms their recommendations, till then this order should be removed. And when the hearing started today, the Attorney General again put forward the same view. After that, the court said that that's all right, and the committee would be given time to come up with their recommendation. Until then, the playing of national anthem in the movie halls will be optional.
Okay, Arpan, thanks for giving us those updates. We will be keeping an eye on more developments in this particular aspect. But moving on, Jignesh Mewani's request to conduct the Yuva Hunkar rally on Parliament Street in New Delhi has been denied permission by the Delhi police. An NGT order had disallowed protests at the Jantar Mantar and has been cited as the reason for the denial of permission. Office of Deputy Commissioner of the Police tweeted last night that the organizers have been advised to go to alternate sites to which they are reluctant to agree. Meanwhile, the organizers said that they would go ahead with the rally where Mewani and Assam peasants leader Akhil Gogai were supposed to address Dalit activists. The NGT had earlier ordered officials to stop all activities of dharna protest, agitations and assembling of people at Jantar Mantar Road.
2 करोड़ युवा को रोजगार दो, सोशल जस्टिस को एंश्योर किया जाए, सिर्फ इतना बात बहुत ही विनम्रता के साथ, डेमोक्रेटिकली, पीसफुली, कानून और संविधान के दायरे में रहकर हम बात करने जा रहे हैं, और हमको भी परमिशन नहीं दे तो बहुत हद हो गई। शर्म आनी चाहिए सरकार को, इस प्रकार का हमको टारगेट किया जा रहा है, टॉर्चर किया जा रहा है। डेमोक्रेटिकली हमारी बात भी ना रखे क्या? आपको लगता है कि सरकार आपको टारगेट कर रही है? बिल्कुल अनडाउटेडली कर रही है, दलित समाज को कर रही है, युवा वर्ग को कर रही है। एक इलेक्टेड रिप्रेजेंटेटिव को बोलने नहीं दोगे? हद हो गई यार।
And a day after the Union Law Minister Ravi Shankar Prasad tweeted in support of the Tribune, journalist whistleblower Edward Snowden said that the journalist should be awarded and not investigated for exposing the Aadhaar data breach. In a Twitter post today, Snowden lashed out at the UIDAI, and I quote, "If the government were truly concerned for justice, they would be reforming policies that destroy the privacy of the billion Indians who want to arrest those responsible. They are called UIDAI," unquote. And well, the Indian all-rounder Yusuf Pathan has been handed a 5-month retrospective suspension for failing a dope test. The sanction will end on January 14 after the BCCI accepted that the violation was inadvertent. In a statement, BCCI said that Pathan had ingested a prohibited substance which can be commonly found in cough syrups, and Pathan's urine sample was found to contain Terbutalin, and Terbutalin is in the World Anti-Doping Agency's list of prohibited substances. BCCI also said that it is satisfied with Pathan's explanation that he was using the medication to treat an upper respiratory tract infection and not as a performance-enhancing drug. The development comes amid BCCI's stoic opposition to allow the National Anti-Doping Agency to test cricketers, and the board has refused to sign up with NADA despite repeated requests by the agency. And in relief for Indian techies, the U.S. Citizenship and Immigration Services today said that Trump administration is not considering any proposal that would force H-1B visa holders to leave the country. This comes days after the Trump administration was considering to tighten the H-1B visa rules that could lead to deportation of 7.5 lakh Indians. And the French President Emmanuel Macron has called for an overhaul to relations between China and the European Union. And Macron pushed for more balanced trade ties and also embraced President Xi Jinping's infra push. He also sought to compensate with China on its Belt and Road Initiative, and France seeks to rebalance its trade relations with China. China generates France's largest external deficit, roughly amounting to 30 billion euros in 2016. And France hopes to obtain better access to the Chinese market for its agricultural and agro-food products, as well for its banks. Macron and Xi Jinping are expected to sign contracts today. And China has denied reports that it was planning to build a military base in Jiwani in Pakistan's Balochistan province, calling them unnecessary speculation. And the province is close to the Chabahar port, which is being jointly developed by India, Iran and Afghanistan. This comes after a report in Global Times, which quoted a Washington Times report that China is in talks with Pakistan to build its second overseas military base. China's Foreign Ministry spokesman Lu Kang ruled out the development and said that he was not aware of the development. And the secret US military satellite launched by Elon Musk, SpaceX, hasn't been spotted in orbit so far, creating doubts over the mission's success. And the mission code named Zuma was launched on Sunday. But the US Strategic Command, which monitors man-made objects in space, said it did not track any new satellites since the launch. And SpaceX has only said that the Falcon 9 rocket performed nominally. And with that, it's a wrap on the show. I hope that we've helped you catch up with all you need to know and all that you missed through the day. Thanks for watching, and stay tuned in a Bloomberg Quint.
Are we live?